Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw the market balance in a very wide range, a lot of volatility, trading on above average volume. And at this point, heading into the open, we know that overall the market is still trading within a large balance. And on the larger time frames, the sell side is still in control. The main thing to keep in mind today is that we are trading in a news-driven market, a high volatility and high momentum market. So it's going to be very important to track that momentum throughout the day. And the NYSE tick can be a very good gauge for tracking that momentum to see, if one side is more dominant than the other in the short term. And keep in mind that if we are trading in a wide range balance in a high volatility environment, then we can get big swings in either direction the way we got yesterday. And in that case, the larger time frame bias may not have as much of an impact on the market just because it's just so volatile on the smaller time frames. But bigger picture, as long as we are trading within this balance, where the upper edge of the balance is 76 to 79, the larger time frames are going to continue to be bearish, and that means that on long setups, we do want to be a little bit more careful, get decent trade location, or be sure that we are trading in direction of upside momentum. So if you're taking a long where the location's not that ideal and you're going against the immediate momentum, then it's very easy to get run over in a market like this, simply because the expanded volatility can hit your stop loss before there's really any reaction. So you do have to be a bit more selective when you're taking location-based trades. But if you're going with the immediate momentum, then you can be a little more aggressive. And as long as the trade is managed correctly, volatility can of course be a very beneficial thing for day traders. So off the open, this short-term support at 56.58 is going to serve as a very small time frame bull bear zone. If we are holding above 56.58, then we know that even though the market's balanced, there's still potential that buyers can step in and take ES back up to 67.69. And beyond that, we have the gap fill at 73.75. 76 to 79 marks the upper edge of the overall balance that we're trading in right now. So we are going to need to see some very strong upside momentum in order to get any kind of sustained upside movement here. And without that strong upside momentum and broad market buying up at 76.79, the sellers can still step in. Now the reality is that if the market is quite weak, then we probably will not even get back up to 76.79. And this 56.58 is very much middle of this, the overall range, middle of the balance. And if we're holding above it, that area also marks the high volume node of the balance. So it just tells us that, the buyers are being a little more aggressive. It doesn't mean that things can't change, into the open and once the market kind of finds its footing, one way or the other. But holding above 56.58 does tell us that the buyers are being a little more aggressive, and a break below 56.58 can result in another downside move into at least the 49.50 zone and possibly even lower into 45 quarter to 46.75 and 42 half to 43 half. Now, as the market's going lower, again, keep in mind that if you're fading strong downside momentum, then you have to get very good trade location, right? Now 49 to 50 is a decent zone, but if there's big momentum going into it, then that zone does not have to necessarily shut off that downside selling, and we could even go and test 45 quarter to 46.75 and 42 half to 43 half. So location wise, 42 half to 43 half is a much better zone than 49 to 50, especially if the market is exhausted into it. Also keep in mind that as the volatility expands, you can get a lot of just intraday swings, and even the reactions off the zones can be 5 to 7 points quite easily, and sometimes even more. So if you're holding for a big move, then be okay and be comfortable sitting through some counter rotations, right? Some moves where you get bounces. For example, let's say if you're short and you're holding for a bigger move, understand that you can still get reactions at the support zones. So either have the conviction to sit through that, or if you don't have the conviction, or if you're seeing some warning signs, then take profit and re-engage, right? Look for the next setup. But understand the market environment that you're trading in. It's a high volatility, high volume environment. That means you can get a pretty decent sized range, and then a lot of volatility within that range as well. And that means that we can go through the immediate support and go down to the next one, and we can go through the immediate resistance and test a higher resistance zone, which would be 73, 75 previous close, and 76 to 79, which is really major resistance at this point. Aside from that, if you look at the world markets, China completely got killed overnight. Overnight here in the U.S. The Greece issue is still kind of up in the air, and of course that leads to uncertainty in the market. So these are a couple of drivers in the market right now, and with the larger time frame being bearish, it still makes sense to be a little more careful on the long setups. It doesn't mean you can't take long setups as a day trader. If you're looking for a 7-point reaction, for example, or a 6-point reaction, that you can get off of some of these support zones, and even though it goes counter to the larger time frame bias, that's okay. But understand the type of trade you're taking. And if you're fading everything, right, internals are negative, tick is negative, price action's bearish, then make sure you're getting very good trade location. Otherwise, wait for a better zone, right? You don't need a whole lot of trades to do really well in this type of market where you're getting these big intraday swings. If you can nail even one or two of them, you can do extremely well. Just keep the focus on reward to risk. Now, it is okay to be a little more aggressive in this environment because with the higher volatility, you're going to get more setups overall, right? So if, let's say, a couple of weeks ago you were averaging, let's say, 3 trades a day, then you are probably going to see 5 or 6 good setups today. Now, it doesn't mean that you're going to be able to trade all of them, but that's probably what the market's going to offer you. And if you're willing to take it, and if you're willing to be aggressive but still trade according to correct trading process, this volatility can be a very good thing. But it is a double-edged sword, and if you're trading it incorrectly, or if you are misreading it, or kind of jumping in at an area that's not really that solid, then of course that can work against you too. So be selective, but when there's a good setup in front of you, don't hesitate and pull the trigger, because with this bigger volatility, even the small rotation in this market can be 6 or 7 points, and that can give you quite easily 2 to 3 R in your trade. So it is a good opportunity environment here. The reward potential is fairly high on most trade setups. The larger time frame is bearish, especially if we're holding below 56 to 58, which is an area that's being tested right now. So that larger time frame can press, and if we're holding below 56, 58, it just tells us that the sell side is being more dominant within this current balance area. And then we can go down and test lower support zones. The major support on the downside is 36.38 and around 34, which marks the previous swing low here. In the event of a breakdown below 36.38, we're going to need to see some very strong selling as well, and broad market selling. So very negative internals, sustained negative tick, and weak price action. Then it could lead to even a break lower and test of 30 quarter, 32 quarter, potentially 23.26. Now the 23.26 area is a very good spot for responsive buyers to step in. But again, we are going to have to watch that area in real time and just judge how the market is getting there, if it gets there. But for now, we are trading within a range. It's a high volatility environment. There are going to be good setups probably on both sides, but you want to be a little more selective on the longs and give still a little bit more edge to the shorts, simply because those will be in alignment with the larger time frame bias. But on top of that, just be very much in tune with the immediate momentum. And momentum is not something that, if it's upside, it's going to remain upsided, or if it's downside, it's going to remain that way. It can go back and forth throughout the day, right? So understand, are we in a kind of a two-sided momentum environment, or is there one-sided momentum? Is it, quite strong, or is it weak? Monitor that and follow that throughout the day, because it can go back and forth. And if you're going against momentum, then make sure you get very good location. Otherwise, it's going to be a risky setup. So those are the main ideas heading into the open. Let's see how the market reacts to 56, 58. Use that to establish very short-term bias, keep the bigger picture in mind, and take it from there.